All right, now I'm talking to Marc Cunningham with Grace Property Management. And Marc was on last month's episode, so I wanted to bring him back on this month's episode. Marc, glad to have you back.
Chris, thanks for having me.
So as just a quick recap, give us a quick rundown on who Grace Property Management is and kind of the portfolio that you manage.
We are located in North Denver. Our office is in Thornton. We've been in operation since 1978, so been around for quite a while. And we manage primarily single family and small multifamily type stuff. And our geographic area runs anywhere from the South Denver to North Denver. Most of our stuff's in the North to Central Denver area, but we do a little bit of everything. We've got about just under 1,000 doors that we manage.
Good. And so let's just jump into it because this is the $1 million question for the month. How did rents pan out for May?
So as we stepped into the first month of this COVID crisis, right, the property management community seemed to be overreacting. The sky's falling. No one's going to pay rent. Everybody's going to leave us high and dry. And then lo and behold, the first month, most people paid. And then so the PM community then went to, we skated through that month. Next month is going to be awful. Everyone's going to leave next month. And so people paid the next month as well. And we saw it play out again for May. May will be the month now. Now May is going to be the month where people don't pay. And by and large, the short answer is we saw an exact repeat of the last few months. Did people pay later? Yes, they did. Did they still pay by and large? Yes, they did. So if you looked at it, if you picked a particular day of the month where we would track our delinquency, like let's say the 10th day of the month, on a normal month, by the 10th, we'd expect to have maybe 90% of all the rents collected for the month. And by the time we get to the end of the month, we're on an average, we're running about 99%. So by the time we hit the end of the month, we have pretty much everything in. Well,
Okay.
What happened is when we hit the 10th of the month, we had a much higher delinquency because people were just taking longer to get that payment in. Once we hit the end of the month, that 99% collection rate was probably, not probably, it was about 2 percentage points lower than that. So we instead of having a 1% delinquency, we had about a 3% delinquency. So depending on how you want to skew that, you could say, well, gosh, your delinquency was up 300%. Yes, it went from 1% to 3%. But overall, given the fact that the sky is falling and people can't even buy toilet paper, that's a pretty good deal. Now, we're already seeing it now for June. People are saying, well, June will be the month or July will be the month. But by and large, we're seeing a repeat of the same thing. There's certainly more delinquencies. People are taking more time in paying, but by and large, people are still paying.
Okay, because we are recording this on June 8th, so everyone has a reference time. And so you're seeing the same trend, just more late payments so far in June.
Yes, correct.
Okay.
And then for June, if you and I would have been having this conversation 9 days ago, we would have been talking about, for us, our plan now for June would be to go back to some of those folks, because there have been a handful of folks that haven't paid March, they didn't pay April, they didn't pay May. They've been taking advantage of the laws that are out there. Well, for June, that was supposed to now expire. So for those people that really were milking it and saying, you know what, I'm not going to pay and I'm not going to move, we were supposed to be able to start the legal eviction process in June. However, Governor Polis, right at the midnight mark there, extended the moratorium on evictions another 15 days. So we can't do anything again now for those small percentage of folks that actually are not paying.
So do you have like what percent or how many people are not paying out of your roughly 1,000 units?
It's a handful.
They're milking the system?
5. I think we probably got 5 people that are just, they're not returning our calls. They're basically saying, you know what, I don't have to pay. I'm not going to pay. Maybe I'll pay when things turn around, but you guys can't do anything about it. So I'm just going to sit here. So it's very few.
0.5% then, right? If I'm doing my mental math right?
That would be correct if you're doing, if we're both doing mental math right now.
Does not seem too bad to me.
No. Now, if you're, I think the challenge is if you're an owner and that's your property.
Yes.
I mean, who cares that it's only 0.5%? You've got somebody sitting in your property, and this is one of our big frustration points with the legislation. You've got some people, not a lot, but you've got some people sitting in properties that have no intention of paying, and they're going to sit there until they can't. And that's what's difficult and scary for some of those landlords who are like, oh my gosh, what do I do? I can't do anything. I have no legal recourse.
Yeah. Well, I mean, I know from my own perspective and talking to a lot of investors the last couple of months, I mean, a lot of us were thinking that might be in the teens or 20 percentile. And again, I feel bad, luckily I've not hit the unlucky jackpot with any of those tenants milking the system yet, but I do feel bad for those landlords that have it. But overall, like I mean, if you're at one half of, a half of 1%, that's really good since people can, kick the can down the road right now. All right. So great news on the rent side. Things are doing pretty darn good for you. Now, before we hit record on here, Mark, you were saying there's some interesting trends in legislation and leasing. So pick your poison and talk about whichever one you want to first.
Well, if we look at leasing, once a week in our office, we have what we call our vacancy and delinquency meeting. So all of our property managers get together by Zoom, of course it is now, and our accounting person who's in charge of rent collection, she gets together, and our leasing person, our team comes in, and we go through, on the leasing side, we go through every vacancy we have. And they give us this little spreadsheet, and the spreadsheet shows the list of all the vacancies. And we walk through them one by one by one. And we look at things like, what kind of activity are we seeing? Are we getting calls? Are we getting showings? What's the feedback? And do we need to drop the price? And we just go through these. And the spreadsheet is ordered in such a way that at the top of the list, it lists the property that has been vacant the longest. And then underneath that, the second longest. So we have the kind of like the red alert properties at the top, and it gets down to the lower ones. Hey, this one's at the bottom's only been available for a day. Well, about 3 weeks ago, we're going through this. And about halfway through the meeting, I said, I kind of stopped. I said, hey guys, do you see a trend here that I see as we look at on this list, like the top 12 properties? Because remember, we manage single families, we manage condos, townhomes, duplexes, throughout the whole Metro Denver. So all the way from Longmont to South Denver. I said, if we look at our top, I think it was at the time it was our top 12. Of our top 12 vacancies, 10 of them have some very disturbing correlation.
Oh, really?
10 of the top 12 vacancies, the things we can't get rented, 10 of the top 12 are all located in downtown Denver. They're all condos, and they're all 1 or 2 bedrooms. I think 8 of the 12 are 1 bedrooms. Those things aren't moving. Now, the other properties, I mean, the rental market overall is strong. Things are moving.
I want to, this is really interesting data here. So you said most of those are the condos in downtown Denver. Are these like the new A-class condos, or are these like the older buildings? Like what?
Mostly new.
Really?
So the new stuff. So when you and I talked a year ago, whenever it was, Chris, I think one of the things we talked about, one of the things we've been telling our investors for the longest time is, if you're an investor, we don't recommend buying high-end Class A condos in Denver because there's just an oversupply. They've been building this stuff, and they have. Well, now we are starting to see the impact of the fact that there may be an oversupply of that, because when the economy does slow, and if you do need to rent something, you're probably not going to go pay for the top of the line dog park with the workout room and the pool and all that stuff that you can't use anyway right now, right? So that stuff's just not moving. And there's so much competition for that it's almost, our leasing person said, guys, it's almost irrelevant if we drop these rates. There's just no demand. People, they don't want this stuff. And part of that at the time was Denver was on lockdown, right? You can't even leave anyway to go show these things. But we would compare that to, for example, single family homes in the suburbs. Those things are getting snatched up. They're getting rented super fast. But we had not seen that trend change now in the last several weeks. We've just seen it maintain. So every week we look at our vacancies, and sure enough, our top 10 properties are high-end Class A downtown Denver type properties that there's just demand has dried up.
And I know nothing about that market because that's something I've not had any investor buy those properties, because I agree with you. I just don't think it's a great investment, and the numbers are hard to make work. So that's really interesting. Now, do you have other like condos and townhomes in Denver, but they're the older Class B, Class C stuff? Are those leasing up, or are you seeing those take a longer time as well? Or do you have that data?
They're still taking a longer period of time. And what very likely could happen is we'll see rents get pushed down on these Class A properties, which will push rents down, and then on the Class B properties, and it really will push rent down. I mean, the classic answer to supply and demand is the more supply that comes on the market, the demand's going to be lower. And if we want prices to come down, let's build a lot of the stuff. Well, they did build a lot of the stuff, but they all built Class A. So that's going to have a downward pressure rental price impact across the whole market, we believe. But we're seeing it first, as we always do, see it first in the Class A condo townhome stuff. Now, to take it even a step further down that rabbit trail, if you look historically on real estate pricing, historically, if you look back over the last 50 years, the condo townhome market is always the first segment of the market to take a hit when the market starts to slow. So could this be a sign of a slowing market, real estate sales market? Hard to say, but this is always the first sign. Now, it may just be because we overbuilt there, and we still haven't overbuilt on single family, so we should be okay there. And that's kind of our thinking, but it's something to keep an eye on.
That's interesting. Okay, so what about on the legislation side? Because you said there was some, I think you used the word scary before we hit the record button.
Yeah. One of the questions or things that you and I talked about is it still a good time for investors? If you're an investor and you have some money in your pocket, do you want to buy? And we would say potentially yes, but be very, very cautious. As we just said, don't go downtown and buy a brand new construction property if you're planning on renting it out, because it's just hard to rent right now. Demand for single family homes, great, very, very strong. The thing that really gives us concern is the trend that we're seeing continue now with the Colorado legislature and with the governor on imposing more and more restrictions on landlords, making it less and less attractive to buy a rental property. So as I mentioned earlier, the moratorium on things like late fees, on anything to be posted, on any eviction process, even being initiated, has been delayed again till the middle of June. So you can't do anything at this time. The legislature is in discussions on potentially passing a bill that would extend that for, and I've heard all sorts of numbers, anywhere from 2 months to 180 days. That's a scary thing. That's a scary thing for that small group of owners that I just talked about a few moments ago that have tenants in place that just haven't paid rent in 3 months. Well, if you give those tenants another couple months, they're not going anywhere. And the system is already designed in such a way that even if we could start potentially, putting that word in air quotes, evicting people today that hadn't paid rent, it's going to take 3 months to work its way through the system. So people still have 3 months to pay to stay. So this is not like we're throwing everybody out on the street. But we've got to be cautious, I think, as a society, because if at some point, if we push landlords more and more into a corner, you're going to get some of those landlords that just say, you know what, this is not worth the risk. I can't tie up so much of my money when I have so many other options out there to put money into a property where I could potentially put in a tenant who's not going to pay rent, and there's nothing I can do about it.
Yep.
So we have that on the horizon. Another bill that is pending right now is for landlords, it would say this: if you as a landlord file an eviction, there's an additional fee, a filing fee you must pay of $30. And that $30 filing fee will go to fund the eviction legal defense fund. So it will provide an attorney for the other side. Now, if you just think about that just step back. Well, so what that would say, if I want to sue you, Chris, my filing fees have to include additional funds that you, Chris, the person I'm suing, can use to go get your own attorney. Like that just, it's kind of crazy in the face of it. Yeah. It's stupid, but it's going to increase the filing costs. It paints our landscape in Colorado as very un-landlord friendly. So say if your tenant doesn't pay, you got to go pay for their attorney. And that's not exactly what it is, but that's practically speaking what it is. That's a scary thing. And there's another pending law that would create an additional protected status, which would be source of income. Now, City of Denver's already done this. Some municipalities have done this, but this would be a statewide law that would say you cannot consider the source of income when a tenant is applying for property. Really what that means is you would be required to accept government subsidized housing voucher programs on all of your properties, wherever they are, statewide, meaning you have to take Section 8. And some landlords love it, some landlords don't. And that's a whole other conversation. But to require landlords to work within that government program when the program itself is difficult at best to work through, that again is going to dissuade some owner landlords, because some owner landlords say, look, I don't want the government walking through my rental property telling me I have to fix that snag in the carpet. I just don't want that. That should be their right to say, no, we don't want that. But this would say, no, you've got to do that. And the fear from the bigger perspective is this is going to drive more landlords out of our market, which will reduce the supply, which is going to just exacerbate the problem. Now we've got less supply, we've got more demand. Rents are going to go up even higher. And I think this is a real thing, impact that landlords are looking at this right now to see how this political landscape is going to play out. Because you've got a lot of folks out there, a lot of small landlords that own 1, 2, 3, 10, 20 properties. And they don't need to do this. They could pull this out and go to a different market. There's a lot of other markets. They could put it in the stock market. There's a lot of things to do with your money right now. There's a lot of opportunity. And we need to make this market attractive to investors, not less attractive, because it hurts tenants.
As we wrap up this segment here, is there any good, because I know you're active in, some property management group. I can't recall the name of it without butchering it, but I know you're very active in all this. Like, what are some things that, us small landlords can do to just support the stuff, or is it sign some letters to our senators? Like, what can people actually do?
Well, because of the fact that we're kind of on, shut down, the legislative session should be over. It was voted to be extended because of the COVID stuff. It should be over right now. So what we are recommending our owners do is simply reach out to your representative and say, hey, please don't overreact. We're already seeing the market straighten out. Tenants have not been evicted by and large. They haven't even not been able to pay. So this didn't turn into the worst case scenario we thought it would. So please don't overreact and start passing laws that when things do get back to normal, now it's going to make me want to get out of the game as a landlord. And now it's going to make my tenants have to move because I'm going to sell my house. We have had a number of our owners call us and say, you know what, don't renew the lease. When they renew, give them a notice to vacate, and I'm going to sell. The market's hot, I'm going to sell. Well, that's one less rental property on the market, one more tenant that now has to move, and they're going to go pay more rent somewhere else. So call your legislatures on this and tell them to please don't overreact on this stuff.
Do you know, are those owners selling with like that legislative environment, or are they selling just because they want to take money off the table?
I think it's both.
Okay.
The ones we've talked, no, they're not saying, hey, I'm selling because I may have to pay another $30 to evict my tenant with this legislation. Nobody's saying that, but it's been like one thing after another, after another, after another. And there comes a time where investors say, gosh, this doesn't look well for the future. The numbers already are almost impossible to make work anyway. And I know people say, well, rents are too high, and rents are high, but sale prices are higher. They're out of whack there. It's hard to make it work. So we need more supply. At the end of the day, that is the one answer to this whole thing is we need more supply of single family homes, encourage investors. I wish the legislatures would give them a tax credit of $5,000 to go buy a rental property. Boy, you'd have investors snapping up rental properties everywhere. You'd have a bunch more inventory in the market. Rental rates would go down. It would. But instead, we're talking about things like an extra cost to evict a tenant.
Marc, this has been insightful. I'm glad to hear that your rents are coming in really well still. Any final thoughts or data points to share before we wrap up?
We're coming out of this. We're coming out of this pretty quickly. Tenants, as you just said, tenants are paying their rent. That is such good news. Nobody knew exactly how this was going to play out, but we anticipate that this is going to just continue on with tenants still paying, have a little more delayed. And I think in the next couple months, we're going to get back to as normal as we could be.
Awesome. All right. Well, Marc, thank